Equity Market Update, May 2023. Indian equities continued to trend higher in May 2023 and Nifty 50 and S&P BSE Sensex ended the month higher by approximately 2.5%, supported by strong FPI flows. The key market impacting events during the month includes US Fed hinting at pause in the rate hiking cycle, IMD retaining its normal monsoon forecast, RBI announcing withdrawal of INR 2000 notes, US lawmakers agreeing for increase in debt ceiling limits, etc. Mid-caps and small caps outperformed large caps during the month. The month saw broad-based improvement across most major sectors. Auto, IT, and FMCG were the key outperforming sectors, while metal and oil and gas underperformed. Performance of major global equity indices was mixed, with US, Japan, and Korea ending the month with positive returns, while Europe and China equities underperformed. FPI flows improved significantly and they bought equities worth $5.3 billion in May 2023. Cumulatively, FPIs have bought equities worth $3.6 billion in 5 months CY23. On the other hand, DII sold equity worth $0.4 billion in May 2023 and have cumulatively bought approximately $10 billion in 5 months CYTD23. Of the Q4 FY23 results, earnings of private banks, NBFCs, aviation, industrials and oil and gas were better than expected, while that of cement, infrastructure, utilities, consumer staples, pharma, metals and auto were largely in line with expectations. Earnings of IT and chemical sector were lower than expected. Outlook. As on May 31, 2023, Nifty 50 was trading at approximately 17.4x FY25E price to earnings multiple. The valuation multiples have moderated from their recent peak and are now close to their historical averages. India's market cap to GDP stood at approximately 85% of its peak and within the historical range of past decade. The gap between 10-year GSEC yield and 1-year forward Nifty 50 earnings yield has also narrowed from its peak. Thus, while market valuations are still above historical average but have corrected from their peak. Further, one should view these valuations in the context of structurally attractive nominal GDP growth, a robust economic recovery, a healthy corporate earnings outlook, and strong de-levered corporate balance sheets. Notably, while small caps have significantly outperformed over the past 3 years, it has significantly underperformed large caps and mid caps in past 5 years. We remain positive on equities over the medium to long term, considering the resilient domestic growth outlook, robust corporate profitability, and growth supportive policies. Further, post the corrections in small caps over the past year, valuations have moderated significantly from the peak. Hence, one may consider increasing equity allocation towards small cap funds in line with individual risk appetite and with a medium to long-term time. Accelerated monetary policy tightening, a sharp slowdown in global growth, persistent inflation, a slowdown in earnings growth and a delay in recovery in the rural sector are key near-term risks. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.